we count on the bust, the recession, to correct those mistakes. Well, we made so many mistakes during this everything bubble. When Friday opened up, gold was at about 2,040. Had a big rally on Wednesday and Thursday. It was a new high for the year for gold. In fact, it was up about 12% on the year, which is pretty good because we barely finished a quarter. And we had a 12% move up in gold. You know, a lot of people have been hiding out in treasuries this year because they thought they wanted to play it safe. You know, let me get a 4% yield on my U.S. treasuries. Well, the problem is the dollar is losing a lot more value than 4%. I mean, in terms of gold, it had lost 12% of its value. So that's triple, you know, that 4% yield. So you're not getting anywhere near enough yield to compensate you for what you're losing by hiding out in cash, which is why I tell people not to do that, because I think the losses are going to mount up. So gold was at a 52-week high on Thursday at the close. You know, gold stocks continuing to move up, but still a long way to go to get to, you know, their highs. But then we got some economic news that came out on Friday that should have been bullish for gold, right? The news was, one, we got retail sales, and they were way below estimates. They were supposed to drop by 0.4, and they dropped by 1%. And again, remember, retail sales are not adjusted for inflation. So the actual volume of sales is down even more because we know prices are going up. And so if sales are down, that in dollar terms, so then they're really down in volume terms. So that happened. And also we got some manufacturing numbers that were weaker than expected. And also, you know, capacity utilization jumped up to 79.8, which I think is a bad sign. That was a big spike. This is the highest it's been in a while. But the closer our factories get to capacity, and if we still have lower production, that shows you that we're running up against our own ability to produce. And so that means less supply, and that is an inflationary number. But the overall manufacturing production numbers were weak. Retail sales were weak. You would have thought, oh, that's bullish for gold, because that gets traders thinking about, oh, you know, the Fed can't hike as much, or they're going to cut more, the economy is weaker. But instead of rallying on that news, gold tanked. In fact, it dropped, I think, $45 an ounce at its lows. It got back down below $2,000 an ounce. Now, it didn't close there. It rebounded a bit, down about $35 on the day. So it closed the day and the week above 2,000, about 2,005. Let me check out where it is now. It's down about $1. It's actually, no, now it's down $4, 2001. And as I've been saying, I think that anything below 2,000 now is to buy. I think this is the low end of this trading range. I just don't expect us to stay in this range very long. I mean, we're in it now, but I think we're going to break out and we're going to keep moving higher because the fundamental news, the technical news is just too bullish for gold. Now, one of the reasons that gold rallied earlier in the week, ironically, it had a big rally on Wednesday, the day after I did my last podcast, when we got the CPI numbers. And again, the reason gold rallied was because the CPI number came out weaker or cooler than expected. They were looking for a year-over-year increase in the CPI of 5.2%. And instead, it only rose by 5%, right? So not as much inflation as they thought. In fact, that was the lowest year-over-year gain since May of 2021. Now, that shows you how much inflation we've had, because you have to go all the way back to then to find a year that was less than 5%, right? So there's a lot of inflation here. But it was lower than they expected. But still, if you look at the core, I mean, the core was still up 0.4 in 1 month. That's still a big increase. Year over year, that's 5.6%. But even if you annualize the last month's core at 0.4, that annualizes to more than 5% annual inflation at the core, right? Which excludes food and energy. And so how anybody can look at these numbers and conclude that the Fed is anywhere near winning its inflation battle. Look how much the Fed has already raised rates, and that's all they've achieved. And again, I think that the numbers we're getting now are kind of the bottom. Because look at oil prices. I mean, oil got back above $83 a barrel during the week. Now, it didn't hold the 83 handle. I think it closed at $82 or $82.43. I'm looking at it now, is where it closed. And the US dollar index, even though it rallied on Friday when gold sold off, on Thursday, we actually broke 101 on the dollar index. So that was a new low for this move. Now we rallied back up and in the dollar index, but we're still below 102. I think we closed at 101 spot 50, and I'm looking at it now. It's up to about 101.70 here this evening. But a very weak dollar and strong oil prices, to me, those are more forward-looking indicators. And the reason that the headline number has come down, and it's come down to 5%, which is still a big number when you're looking at supposedly a 2% target. But one of the reasons for that was that oil price had come down. Well, they're going up now. And clearly with all these production cuts and the weak dollar, those forward-looking indicators of inflation would tell you that inflation is going to be a lot stronger in the future. And so looking at these CPI numbers and thinking that it's going down doesn't make any sense. But what also doesn't make any sense is the fact that gold rallied again on the idea that there's not as much inflation as we thought. And so the Fed's not going to have to hike as much, or they can cut sooner. Traders are right to be buying gold on the inflation news, but they're wrong in their thinking that inflation is going away. It's not going away. Inflation is going to get worse. But that's actually more bullish for gold than what they think, which is that inflation is going to go down. And the ironic part about it is, to the extent that the inflation numbers get better, and that means that the Fed can be easier with its monetary policy, or the markets believe that, that immediately sinks the dollar, causing commodity prices to rise. So the idea that inflation is coming down automatically means it's going up, because the perception that inflation is coming down leads to weakness of the dollar, which leads to strength in commodity prices, which will, be factored into the CPI. But that's the news that came out on Wednesday that caused gold to spike. It was up like $30, I think, on Wednesday, following that, that softer than expected inflation news, even though it's inflation that is really driving people into gold and that will drive people. In fact, I watched an interview on CNBC with Warren Buffett. And if you can read between the lines on what Warren Buffett was saying, because, he really is a coward in many senses, because he's afraid to speak the truth. I mean, he knows the truth. You can tell that he knows the truth. And I've talked about this for a long time, that if I was in a room with Warren Buffett and the two of us were there and there were no cameras and no reporters and we spoke off the record, we would hardly disagree.